Hi, my name is Russell McDonald. I am a mortgage broker here in the San Francisco Bay Area. Wanted to give you this quick briefing. It is October 31st, and wanted to let you know a little bit about what's going on in our markets today. So, yesterday, we had a decision from the Fed to drop their rates by 0.25%, and immediately some of my clients were asking me if that meant that they would save another 0.25% on their mortgage. That's not really how it works, guys. All that the Fed controls directly is their rate that they charge to the 20 or so banks that have access to borrowing money from the Fed, and in turn the rates that the other banks all charge each other. Our 30-year mortgages are tied more in lockstep with the 10-year treasury notes, which got a little bit better, but nowhere near even 1/8%, much less a full 0.25%. Basically, the financial markets were already certain that the Fed would drop by 0.25% yesterday, which means that if for any reason they had not lowered their rates as expected, you would have actually seen mortgage and treasury rates spike up in kind of a knee-jerk reaction. What the markets really wanted to digest is what the Fed said about future rate movements. Now, Chairman Powell indicated that they're probably done lowering rates for the time being. Some people thought that there was a chance there might be another rate drop in December when the Fed meets again, but that does not look likely right now. The good news on our end is that it doesn't look like the Fed is going to be raising rates again anytime soon because the economy has cooled off quite a bit. Powell did say specifically that the committee doesn't see much chance of inflation increasing in a way that would require policy action, and that inflation appears to be settling at under 2%. So what is really interesting here is that there's economic news out today that caused much more of a movement in long-term rates than the Fed's action yesterday. First and foremost, Brexit is still a mess, and the uncertainty there is pressuring long-term interest rates downwards. That's good for us. Likewise, trade negotiations with China don't appear to be going too terribly well. There's a planned meeting coming up in Chile that was supposed to help nail down the terms for a long-term agreement, and that meeting has been canceled. Chinese officials have been saying that they don't have any room to negotiate on the most difficult issues in question, and they've expressed that they don't think negotiations are going to come up with any meaningful movement unless the United States is willing to roll back more of the tariffs. Now, perhaps an even bigger sign of troubles brewing in the economy is the Chicago Purchasing Management Index report that came out today. It came out at 43.5. Now, this is the lowest level for that report since December 2015, and the general consensus from the economists is that they were expecting a reading of 48.3. Now, when it comes to that report, keep in mind that anything under 50 means that conditions are getting worse. So they weren't expecting great news, but they were expecting it to be significantly better than what we got. One component of the report, new orders, dropped to 37, which is the lowest level since March 2009. You guys remember what was going on in 2009? Okay. So tomorrow, we've got the ISM report as well as the employment report coming out. They will be released tomorrow, and that may have better detail on how things are going as a whole. But economists rely heavily on the Chicago PMI report because that region provides a pretty good peek at what is going on in the nation as a whole. So the upshot of all this today, rates are actually about 1/8% cheaper right now than yesterday morning. But the big movement wasn't caused by the Fed announcement, but rather the trade war, Brexit, and the economic reports that came out today. Okay, I want to take a brief moment and let you guys know that I have a podcast coming out that's going to deal with mortgages, credit, trusted financial advisors, all things related to small business. It's going to debut in November, So be on the lookout for it. If there are any topics you would like me to create content on, or people you'd like to see me interview, please let me know. I'm trying to do whatever I can to be a resource for all of you. Likewise, if there are other reports you want me to put together that have to do with credit issues, mortgages in general, real estate, I can even go through information about the life of an entrepreneur. I've actually been awarded 6 patents for the systems and business methods I came up with to make real estate transactions and mortgage transactions flow better. And I wrote the original provisional patent applications myself without the help of attorneys. And maybe that was a big mistake, but it's actually turned out to be something of a blessing in disguise, because I don't always do things exactly the way you're supposed to do it. And so it's actually turned out to be a benefit in the way everything came together in the long run. Anyhow, it's October 31st. That's the recap of the Fed decision yesterday and what's going on today. If you have any mortgage or credit questions, please let me know. Have a happy Halloween. Be safe out there, and hope everybody has a great weekend.